Hi guys, this is Parin Shah. Welcome you all in our new video about basic concept of ITR-4. Let us understand the definition first of ITR-4 as per the Income Tax Act, and let us try to decode this definition in a very simple way so you all have a proper understanding about ITR-4. What is ITR-4? Let us understand the definition written on Income Tax Act. ITR-4 is the income tax return form, and this form is designed to give a relief small businessmen, small taxpayers and the professionals who opt for the presumptive income scheme under the section 44AD, 44AE and 44ADA. You must have one question like what is presumptive income scheme, and second question is what is the section all about. So let us understand the definition of presumptive income scheme and then understand the section. Presumptive income scheme. Let's take one example to understand this term in a basic way. If you are running a small business, so it's very difficult and it's not easy for you to maintain the books of accounts and calculate the profit or loss. Or sometimes you may not have enough resources to maintain the books of accounts. It's very difficult for small taxpayer. So keeping this thing in mind, income tax department laid out some provision where your income is assumed based on your gross receipt of your business. This method is called presumptive income scheme. After understanding the meaning of presumptive income scheme, let us understand the section under the presumptive income scheme. There are three sections under the presumptive income scheme. First, 44AD, second, 44ADA, and third, 44AE. Let us first understand the section 44AD. Section 44AD purely designed to give relief to those taxpayers whose business income is not more than 2 crore. Now the question is that who can adopt this provision? Under the section 44AD, individual, HUF and partnership firm can adopt this provision. But one important note is also there. LLP cannot adopt this provision. So it means LLP cannot get the benefit under section 44AD. I am sure that you might have one question or query that how to calculate the tax on income under the scheme. Government has clearly mentioned the criteria under the scheme under the section 44AD. It is two criteria are there. One is 8% on cash transaction and 6% on a digital mode of transaction. I know it's very technical, but no need to worry about that. Let us understand this calculation through an example. Like if your total gross receipt, if you are running a business and your turnover is 15 lakh for the financial year 1920, out of 15 lakh you will receive the 11 lakh through a cash and 4 lakh through a bank. So how you gonna calculate this tax? You have to calculate the 8% on 11 lakh because you receive through a cash and 6% on a 4 lakh because you receive through a bank. So as per the calculation, you have to calculate 11 lakh at the rate of 8% is equal to 88,000 and 4 lakh at the rate of 6% it's 24,000. So total taxable income is 1,12,000. I hope I cleared all your doubts. Now let us understand the second section, which is 44ADA. Section 44ADA recently introduced by the Income Tax Department to give relief to those taxpayers or professionals whose income is not more than 50 lakh rupees. So under section 44ADA, the question is that who can adopt this provision under the section 44ADA. So here individual, HUF and partnership firm can adopt this provision under section 44ADA. And one important note is also there. LLP cannot adopt this provision, means LLP cannot get the benefit under section 44AD. Now let us understand the criteria. How to calculate the tax on income under the section 44ADA. Let's take an example like Mr. Ram is a consultant and his total receipt rupees 30 lakh for the financial year 1890, and the income tax has criteria to calculate the tax, which is you have to calculate the tax on a 50% of your total receipts. Means if your total receipt is 30 lakh, so 50% of your taxable receipt, it is 15 lakh. So you need to pay the tax on a 15 lakh as per your income tax slab. I hope I cleared this thing. Now let us understand the last section, which is section 44AE. This section talks about selective business only. So let's first understand the eligibility of business under the section 44AE. Here it is. Eligible business in this section clearly mentions that the person who is engaged in a business of plying, hiring or leasing goods carriages and does not own more than 10 goods vehicles during the previous year. So this is the eligibility of the business. Now let us understand the criteria in the next slide. Now let us understand the last part, which is computation and taxation part. How to calculate the tax on income under the section 44AE. Income tax department has defined two criteria for two different situations. First for heavy goods vehicle and the second is for other than heavy goods vehicle. In a first section, your income will be computed at the rate of ₹1,000 per ton gross vehicle weight for every month. And the second criteria is that your income will be computed at the rate of ₹7,500 for every month. I know it's a very technical language, but no need to worry about that. I'll clear your doubts and queries through an example in the next slide. Let's take an example to understand the calculation tax under the section 44AE. Mr. Ram has a total 8 heavy goods vehicle having gross weight of 14,000 kilograms ton. So how are we gonna calculate the tax on income under section 44AE? In this example, it clearly mentions that Ram has a heavy goods vehicle. So I have to select the first criteria to calculate the tax under the section 44AE. So in this example, how much gross weight given in this example? 14 ton, right? So we have to calculate the taxable income by multiplying ₹1,000 per ton, means 1,000 into 14 ton is equal to 14,000. But don't forget, Ram has a total 8 vehicles, right? So we have to calculate the all vehicle revenue for a particular month. So 14,000 into 8, it is equal to 1,12,000. But you have to pay the tax to department on a yearly basis. So you have to calculate the taxable income by multiplying 12. So your taxable income for the yearly basis, it should be 1,12,000 into 12, means 13,44,000 under section 44AE. Let us understand the second criteria, which is other than heavy goods vehicle, in the next slide. Let us understand the calculation under section 44AE for other than heavy goods vehicle with same example. Mr. Ram has a total 8 normal vehicles. So how are we going to calculate the tax on income under section 44AE criteria other than heavy goods vehicle? So let's recall the criteria for other than heavy goods vehicle. As per the criteria, you have to calculate the income under the section 44AE for criteria other than heavy goods vehicle. It's ₹7,500 per vehicle per month, right? So in this example, Ram has a total 8 vehicles, right? So ₹7,500 into 8 is equal to 16,000. So Ram total monthly taxable income is 60,000, but you have to pay the tax to the department on a yearly basis. So by multiplying 12, taxable income should be 7,20,000. Thank you so much for watching my video. My aim is to increase the financial literacy in India. So let's contribute your part and your portion by subscribing my channel and sharing my content with your friends and family members to increase the financial literacy in India.